All right, as far as the S&P goes, this is the futures. This is what drives order flow into the ETFs, the popular ones like SPY or VOO. So because this is what drives order flow, this is the one I watch. Right now, as far as the open goes, we have a little bit up and down. Now they've been open for almost 2 hours. So we opened up here, pushed up, made it to this high, pulling back. So far, all we're looking at. So as far as the open Sunday, we have this green and this red candle right here. Hourly, kind of hard not to call that a bull flag. We're in a bull market, and we're just kind of at all-time highs every day. I told you guys last Sunday I was going to actually go directional and buy some puts. I did. I did not, however, do that in the growth account. Just didn't get this. I thought that would be cheaper. As far as risk reward, capital allocation, a lot of that went into play. Just couldn't make it a thing yet. You think it's a bull flag, Cody? At this point, why wouldn't it be? Bull market, all-time highs. This is just kind of the name of the game, right? I did grab, was it November? Yeah, second week of November. And those are, again, risk and capital. So if you hear me talk about those, I don't know if they would actually be a home run, because if we even get a leg down, something similar to this, those puts will be up. I'll trail them. I'll lock in profits, and that'll be it. So if something like this happens, let's say we go down, we up, and then we're just down 20%. Stock market absolutely crashes. You're going to hear me talk about how I made money on this move. Probably didn't really execute or do it again here, and then it melted down, and that's going to suck. But that's where I'm at. I gave it time. I wanted to go after the elections, and again, it really is just for a pullback. So future reference, if you hear me talking about that play, that's what it'll be. If we just continue to grind up and up and never turn back, then do you want me to make a video about what happens when you buy puts and the stock market continues to go up? If I need to make a video that simple, I really can, but I'll give you the TLDR right now. They went to zero, right? Lost. There's no magic way around it. And I had some great conversations this weekend with a couple other traders. And I asked one, and I want him to come on the channel because that's exactly what I do. Different tickers. He thought NVIDIA was a little bit more on the dicey side. Very much an option seller. And the first thing I said was, have you ever taught anybody, and how did that pan out? He says, I've tried, but they just and like what we've talked about before on the channel a whole bunch, they're just really comfortable holding red. People just love to hold on to their losers, and then when one thing is finally green, it's, I gotta take my money and run. Like what your friend tells you at the casino who lost all their money but is like watching you play your last hand of blackjack. Dude, you're up. Take your money and run. In that case, you bag hold your losers and you cut your winners. But it was the exact. I just wanted to have him on here, and I don't know. I'm going to talk him into it, but it was just funny how he had the exact same experience that I've tried to teach a few people. They just don't get the psychology behind it. He did give me some homework. I am going to review it later. Reminiscence of a Stock Trader. It is a book. He says that'll teach you what it feels like to lose and make $1 million in the stock market. He said that's a good one to have people read. So I'm going to read it. We might talk about that in a future video. So if anyone has read it, I'd like it. Tell me about it. Closed tomorrow, right? No, stock market is open tomorrow. Banks are closed tomorrow. Anyway, aside from that rant, there's no such thing as managing a red trade. Period. Right? There's managing green ones to get as much as you can out of a winning trade, and then the red ones are a lost cause. Move on. Peace out. Or they drain you. Is ES up or down this week? Seems too bullish to stop. It does, and I don't want to talk about like RSI or anything like that. I kind of think we're a little bit up. I hate to say overbought. The second I say overbought, someone's going to look at an indicator and think, well, that's not. And we can look at RSI is not overbought, so clearly we're not. I kind of feel like we are. I don't know what the catalyst would be, and there would likely need to be an excuse of some kind to really pull us back. Could just be general profit taking. Let's pull up a. Let's see if we have any news this week. Any letters? Any excuses? Let me get it. All right, so Monday, tomorrow, nothing. Got a bunch of Feds talking. More Feds on Tuesday. I don't think manufacturing index is going to move anything. We have Mom coming on Wednesday. Import prices from Mom. All right, Thursday, a bunch of retail sales, jobless claims. They could probably make a case out of jobless claims, but from the previous reports, I don't know if that's not going to be a rug pull event. Oil report, probably nothing. So I don't think we have anything this week. Nothing that a typical YouTuber is probably going to talk about moving the market. And I don't know if any of these are even really. I'd have to be really leveraged in futures to probably worry about these. So I don't know. I don't know what the excuse would be, and maybe I'm in puts for nothing. I kind of feel like again we're just a little overbought. I struggle talking about this because there is again we talk about a lot that gambler's fallacy, going up to the roulette table and seeing black the last 7 times, so you put your money on red. Absolutely no logic to it. And that's kind of what I'm doing now. I have a bunch of bullish positions. Overall deltas I am long, but I did grab puts to play the pullback. Banks killed earnings last week. I see more good earnings this week, hopefully. For anybody that does have my charts, expected moves are already done. So let me take that back off. All right. So we see these white dashed lines. That is the expected move for the week. That is what market makers have their risk priced in at. It just, again, 1 standard deviation. 2 standard deviations would be this exact amount. Just, again, 95% chance we stay inside that, which is why I pay attention to these levels, because when we get outside of them, then let's say we break this thing down, we break 1 standard deviation, I'm selling put spreads. Again, we break above this, get to that 1.5 mark is a sweet spot for me. I'm selling 2 standard deviation call spreads. That's almost a play I take every time it does. It doesn't happen all the time, but every time that does happen, it's a very easy play. The market is like most of the people in this group. They would rather roll something 6 weeks than lose shares. And no way they're ever selling. Never. SPX to 6,500. Somebody got really offended by that. They said 6,200 by the end of the month. I don't know if that was last month or this month. But that would be pretty impressive. You thinking 6,500 probably end of year price? Do I think Tesla will bounce? We are going to get into that. Tesla. So as I'm breaking this down, I'm going to do the S&P, the NASDAQ, the Russell, and then I'm going to do the Magnificent 7-ish. Tesla will be the last one for that very specific reason. I'm going to go a little bit more into that. All right, but let's move on. As far as the NASDAQ goes, playing the back and forth game right here, really just jacking around. You can look at these zones, but if you didn't even have those, just look at this wick right here. Your buyers are right here. Your sellers are right here. As soon as all of those are exhausted, we're going to make the next move up, which will end up being probably this yellow zone or this yellow one down here. For any scalpers, I'd have my alerts. I would have stop sells right here or stop buys right here. So when we break above, you're good there. It might not even be a bad play at all. Other than that, man, it's you almost have to be in futures to take advantage of this chop, or be an option seller and let theta just pay you every day because it just went nowhere. 10% move up on the S&P puts us at 6,400, 2 to 3% a week. It just sounds so crazy. I guess not really crazy. It just sounds up there a lot. Steve was thinking 6,200 by end of year. No, someone was thinking 6,200 by the end of month. I'm not paying to roll ever. I would never pay to roll a position. No, I would let the shares go at that point. Okay, QQQ. Man, why would this one looks like as far as the NASDAQ goes? This is why we're going to talk about Tesla last. That looks more like a breakout up. As of right now, I'd have to put my chips in that corner. I'd have to go bullish. Without a negative catalyst, though, we just grind. Yeah, I hear you, and that's kind of why I have the tone I do right now. Is I think we're a little bit overbought, but what evidence do I have to support that we are going to pull back? And I can't even say I told you guys so. Like, let's say we sell off this week and I'm right and I make a bunch of money on my puts. I can't even come back and say, told you guys so. This is what I saw. So it does make it tough. And I certainly wouldn't be, this video this week should probably just be more a conversation of leverage. This probably just isn't the time to be just bleeding leverage out of the pores, and let's say you got a 50 grand account. 150 grand in buying power or 100 grand. So sometimes they give you two, whatever. Then the time to be 100 grand in, this is the time to probably just have your positions in cash. Not a cash position, but, again, pay off the leverage, pay off the margin, and just enjoy the game. Just enjoy the breeze while we are grinding up. You go get nuts now or let all-time highs every day. Let that FOMO you into a position you can't handle. That's how you get wrecked. The reason why I never just get absolutely destroyed is because, like I said all the time, you can't lose your butt if you don't put it on the line in the first place. There's no need to ever be that way. If your account is not big enough to get the gains you guys see everyone else doing, you can chase it and probably lose, or you can just do more, which is either be patient, you'll get there, or go do some side jobs. Let it motivate you to gamble your time on a business opportunity that might blow up, not your position. Steve says it's a valuable read. Reminiscence of a Stock Operator by Edwin. It's a story about Jesse Livermore. I'm going to read it. So I don't know. This isn't going to be a book review club. I tried reading books because everyone used to ask me, what books do I recommend? And I just haven't found any good ones because it was like people just scripting out like a YouTube video. They were just saying extra things to put words on paper to make the book thicker. So far I haven't found any, but I'm pretty pumped about the ones he told me to read. All right, as far as the Russell absolutely sending it. No surprise with financials doing well. Financials being one of the biggest things in the Russell. And we talked about this last week about even buying XLF, that it did look like a breakout up. So shout out to everybody who followed that play, and you're up. If you specifically bought XLF for that, I would put your stop at 46.35. It's probably going to tag out, but you can buy the dip later. I think putting it anywhere else, it's going to tag out a little bit later, and then you're not going to get the best dip buy. Reading is overrated. Right one. If I wrote a book, it'd be about as long as a pamphlet and nobody would understand it. It'd be about 4 words, and I'm like, yeah, you didn't get it from my book? I literally told you all about this.